Hello students. Today we'll discuss about the second chapter of accountancy of class 12th, accounting for partnership basic concepts. As you have already learned how to prepare your final accounts for sole proprietorship form of business in your class 11th. Under this chapter we are going to study how to prepare accounting for partnership form of business. Partnership form of business is basically governed by Partnership Act 1932. Now the question arises, what is partnership? Partnership is basically is the result when two or more than two persons join hands to set up a business and share its profits and losses. They are said to be in partnership. As per section 4 of Indian Partnership Act 1932, it defines partnership as a relation between persons who have agreed to share the profits of a business carried on by all or any one of them acting for all. It means partnership is a relation amongst the individuals or among the persons, those who have agreed to do a business with a common purpose and their main motive is to earn profit. The persons who enter themselves in partnership form of business, individually they are known to be the partners and collectively they are called to be firm. A partnership form of business is not having a separate legal existence apart from their partners. Means partnership and partners in the eyes of the law are same. There are some characteristics of partnership form of business. One, two or more persons. Yes, in order to form your partnership form of business, at least two individuals are required to form a partnership form of business. The intention should be the same. The purpose for doing that business should be the same. Second, when you talk about the maximum number of partners, by the virtue of section 464 of the Companies Act 2013, the central government is empowered to prescribe maximum number of the partners in a firm. It means, as per section 464, 464, Companies Act 2013, the central government is being empowered to prescribe maximum number of partners. The central government has prescribed the maximum number of partners in a firm to be 50. As per Rule 10 of the Companies Miscellaneous Rule 2014. So, as of now, a partnership firm cannot have more than 50 partners. And the maximum number of partners as prescribed cannot be more than 100. Second is your agreement. As you told you that partnership is a result of an agreement between two or more than two individuals to do a business and to share its profits and loss. So this agreement basically tells the relationship between the partners. And it's being not necessary that this agreement should be in a written form. It may be oral or it may be written. So it depends on the choice of the partners whether they want to have the oral or the written agreement. But as you know that oral communication or oral agreement basically has some kind of limitations. We'll discuss it later on. The next is business. When you talk about partnership form business, partnership form business will only arise when you came together to do any kind of business. Means it should be an economic activity with an intention to earn profit. If it is a non-economic activity with the intention to with an intention to do service, will not call to be a partnership form of business. So it is clear that you must come together to do a business with an intention to earn profit. Fourth, mutual agency. As I've told you that this partnership form of business will be carried on by all, or anyone may act for all. It means that every individual in the partnership form of business is the principal, means he may act of his own, and is the agent for the others. If all the partners are not in a position to take active part in the management or in the business affairs, so they can authorize any of the partner to take decisions on the behalf of the others, then that individual will call to be the agent of the others. So it is being required that every partner must take active part in the affairs of the business. Fifth, sharing of profits. In case of partnership form of business, as I've told you, they have come together to earn profit. So there must be a share or the ratio on the basis of which the profit or loss will be shared. So under partnership, it will be agreed between the partners that how they are going to share their profit or loss in future. That will be mentioned in your partnership. The next is sixth, liability of partnership. In case of partnership form of business, the liability of all the partners is unlimited. Means in the eyes of the law, if the partnership form of business is not able to meet out its liability, then the assets of the business may be taken, as well as the assets, personal properties of the partners may be taken to meet out the liabilities of the partnership firm. So you can say that the liability of partners in case of partnership form of business is unlimited. So it means that the personal property is also on stake if the firm is not able to meet out its debts. So these are the characteristics or the elements that are being required there to form a partnership form of business. Now we'll proceed to the next topic, that is partnership deed. Now as I've told you that partnership is the result of agreement between the partners. This agreement may be in two forms. It may be oral or it may be written. So when you talk about partnership deed is basically a written agreement which defines all the terms and conditions of the partnership. Means how the partners are going to share their profits in the future, how the partners are going to act, who will be liable, who will take active part, how they are going to share their profits and loss in the future. Means all the terms and conditions of the partnership will be written under your that document, and that document will be known to be your partnership deed. Now here are some of the contents of the partnership deed. The partnership deed usually contains the following details: names and addresses of the firm and its main business. Means here you are going to write the name of the firm as well as the address of the firm, and for which purpose basically the business has been established will be written over here. Then names and address of all the partners. Here you are going to write the name as well as the address of all the partners who are in the partnership business. Next, the amount of capital to be contributed by each partner. As you know that partners have come together to do a common business. So here they are going to contribute the capital. So how much amount will be contributed will be by the partners will be mentioned over here. The accounting period of the firm. As you know, under accounting you have two periods, one known to be a calendar year, means starting from 1st Jan to 31st and ending with 31st December. Second is your accounting period or financial year. It will start from 1st April of this year and it will last for 31st March of the next year. So what is your accounting period, that has to be mentioned over there. The date of the commencement of partnership. Here you are going to write the date when your partnership is going to commence. Rules regarding operation of bank accounts. As I've told you that every partner is the principal as well as is the agent. So under this it will be mentioned that who is going to operate the bank and who will be authorized to do the signatures on the documents related to the banks. Profit and loss sharing ratio, because partners has come together to share profits and loss of the business. So how they are going to share their profit and loss in future will be mentioned over here. Then rate of interest on capital, if any interest will be given or will be provided to the partners on their capital, how it will be and what will the rate for that. Then loan, if any of the partners have advanced any loan to the firm, then how that loan interest will be given to them. Drawings, if any kind of drawings has been made by the partners, if is they are then is they are entitled to make any withdrawal out of the capital of the business or not, will be mentioned over here. Then mode of auditors appointment, if any, how they are going to appoint the auditor, who is going to look after or who is going to check out the accounts of the business. Salaries, commission, etc., if payable to any partner. Yes, if it is mentioned in the deed that the commission will be given to the partner, then the salary will be given to the partner, then it will be written over here. The rights, duties and liabilities of each partner. Every partner enjoys rights and has to take part in the duties as well as he is liable for the partnership. So what are the rights, what are the duties and what are the liabilities of each partner will be written over here. Then treatment of loss arising out of insolvency of one or more partners. So how you are going to make the treatment of the losses if any arises because of the insolvency, means if any of the partner becomes bankrupt and is not in a position to meet out the liabilities, so or is not in a position to meet out the debts, so at that moment of time how you are going to treat that loss will be mentioned over here. Method of settlement of disputes among the partners, how the settlement of the dispute will be done if any kind of dispute arises among the partners in future, will be mentioned over here. Then rules regarding the admission, retirement, death will be written over here. As in case of partnership, with the consent of all the partners, you may admit any of the partner, and you can, in case of death, how you're going to make the treatment of the accounts, how you are going to make the treatment of the accounts at the in case of death of any partner, that will be mentioned over here. Any other matter relating to the conduct of the business will be written over here. Basically all the points regarding partnership will be discussed under your partnership date. So it's very important document regarding partnership. Now there are some important provisions that will affect partnership accounts. If everything has been mentioned in your partnership deed, then it's okay. All the partners are going to work according to that deed. But what if nothing has been mentioned, or if some clauses are missing under your partnership deed? So here is the provision related to that. Number one, profit sharing ratio. In case the partnership deed is silent about the profit sharing ratio, then in that circumstances or in that case, the profit and loss will be shared among the partners in equal ratio, else it will be distributed or it will be shared among the partners in the agreed ratio. I am telling you, if deed is silent about these issues, it is important for numerical questions also. I'm talking about profit sharing ratio, means if nothing is being mentioned about how the partners are going to share profit and loss of the business, then that circumstances the profit and loss will be shared among the partners in equal ratio. Second, interest on capital. In case if it is not mentioned in the partnership deed that partners are going to entitle or will be provided interest on their capital contributed, then no interest on capital will be provided. Means they will not be provided any interest on their capital contributed. See, interest on drawings. If nothing has been mentioned in the deed about the interest on drawings, means drawing is the amount that has been taken by the partners for their personal purpose from the business. In that circumstances, no interest on drawings, I'm repeating, no interest on drawings will be charged from the partners if it is not mentioned in the deed. Interest D, interest on advances. In case any amount has been, in case any amount has been advanced by any of the partner to the firm for any business activity, then in that circumstances, if nothing has been mentioned in the deed, then interest at the rate of 6% per annum will be provided on that advance to that particular partner. I'm repeating, if any amount that has been advanced by the partner to the firm for business purpose, then if nothing has been mentioned in the partnership deed about the rate of interest that has to be paid on that advance, then interest at the rate of 6% per annum will be given to that particular partner on his or her advance. E. Remuneration for firm's work. If any of the partner is doing any extra work on behalf of the others and nothing is being mentioned about the remuneration that you're going to pay to that particular partner for that extra work, then in that circumstances no extra salary, no extra remuneration will be paid to the partner. There are some aspects that a partner has to take into consideration, that no partner should involve himself in any kind of personal benefit out of the firm's property. Second, a partner should not work with any of the competing firm who is in the same kind of business in which the business is involved himself. So for today we are discussing this much only. In the next video we'll discuss about the next topic. Thank you.